Jeff, how you doing? Welcome to the show.
Real good. Thanks for having me.
Well, and also welcome to Decrypt.
Yeah, it's a lot of fun so far. Some really good writers, great tech, and really has its pulse on the cool stuff in crypto. So good to be here.
Look, on the show for the past couple of weeks, I've been covering this whole Coinbase thing. There's a lot happening in Coinbase. You have written a lot about Coinbase. Also, you've written a book called Kings of Crypto. And you know what? I couldn't think of anybody better to ask about Coinbase than you. First things first, Coinbase valuation. Chamath Palihapitiya says that they might shit, pardon my French, shit on retail investors. The valuation of Coinbase before they go direct listing has been 50 billion, 75 billion, 100 billion. I'm hearing 104 billion valuation. Can you tell me one, where is this valuation coming in? And two, should we be scared?
Well, first things first, on whether retail investors are going to get shit on, in your words, it's just the fate of retail investors to get shit on. It doesn't matter if it's a Coinbase IPO, it's our other IPOs. Look at a traditional IPO. The way that works is you have underwriters, they get their Wall Street friends to buy in early at a set price, and the thing pops, and those guys all cash out, and retail investors pay twice as much. That's how the world works. Direct listing, there's more chance of avoiding that because they're just going to float the shares directly. There's no middlemen. There's no, merchant banks taking 8% of the cut. There's, no one lined up ahead of time, except of course in the private market. And if your question is it worth $100 billion? I don't know. That's a great question. I think stocks overall are higher than they should be. I think there's just a lot of froth in the market. That seems high, but also I'll turn back over to you in a sec, Matthew. This is a company that's profitable. Look at all the other, buzzy IPOs like, Airbnb and Uber and DoorDash. These companies are all bleeding money. I think Coinbase is a rare unicorn that's making a ton of money, which is going to put them in a better position for shareholders in the long term.
Well, that's really shame that the retail investor gets shit on. But you said that they're profitable. I want to actually just dig into that a little bit. I remember that they said that they were in profit for 2020 at $322 million, which is absolutely great. Congratulations to them. You also wrote a piece that compared them to Facebook. Can you do me a favor? Tell me, what does that comparison mean, and how does this profitability come into play with their direct listing?
Yeah, the comparison, I just raised it because Bloomberg and some others pointed out that if they go public, their valuation's $100 billion. That's going to be the biggest IPO or direct listing since Facebook. For a company to hit the market, it's going to be the biggest one since Facebook. But there's other similarities too. Coinbase has got something of a monopoly. They're kind of the go-to game in town for crypto. They've got sort of a moat, and that's like Facebook had. There's social networks that go with crypto. You're sort of the first player takes it all, and I think there's a lot of patterns like that with Coinbase compared to Facebook. And likewise, the team behind them, the venture capital firm Andreessen Horowitz, is basically the hidden hand behind Coinbase, just as it was for Facebook. Obviously they're very different companies, very different businesses, but those similarities I think are interesting. And of course, Facebook, whatever you think of them as a company, has been killing it financially for years. And Coinbase, if they play their cards right, could be in the same position.
Where do you think Coinbase is going to be able to kill it? I mean, I guess everybody's looking at this and go, okay, so people can use this to buy crypto. Why is that going to be $100 billion? And why would it be $1 trillion company in the future? Where do you think how do you think they're going to position themselves in the future, or what products do you think they're going to create in the future to get that valuation that we all hope, if we're going to invest in that direct listing, it's going to be?
That's a great question. You put your finger on the one red flag in Coinbase's performance right now. They're a one-trick pony. They make money when people trade on their exchanges, but as we know, with like Robinhood, it's become, people don't want to pay trading fees. It's becoming a commodity. So Coinbase has got to figure out a way to build up, all that cash war chest, develop other products, and they're claiming they're going to be sort of offering like staking services and interest, things like that, and also their partnerships with banks and so on. I think they're going to probably be doing pretty well on that front. But right now, the crazy figures, 96% of revenue comes from trading. And I don't think that's sustainable for long term, but they do have some time to figure it out. And they're going to make piles of money in the meantime.
Well, hope all the investors make piles of money too, because I think a lot of people are nervous, as we just said, that the retail investor might get shit on. Um, with the, do you think that the valuation is? I lost my train of thought there, but that's okay. That's why there's editors. I had a theory, and My theory is that after watching Robinhood, and I saw what happened with Robinhood, the retail investors got shut off. Why did the retail investors get shut off? Is because Robinhood did not have enough money to back all their trades. So what they do is they're basically a clearinghouse. People buy into this, people sell into this, and then they have to settle all these trades off, and they need money to cover all of that in the meantime. And so they shut it off the retail investors to say, hey, we need to ask for more money to be able to cover all these trades. I kind of have a thing that because I was here in 2017 and when Bitcoin was hitting $20,000, Coinbase had this. Coinbase is notorious. Every time there's a pretty good pump in the market, they shut down. Everybody says conspiracy. People just say, a lot of people just don't buy into the conspiracy and they just say that Coinbase is just unprepared for the amount of traffic. But my theory is that they are worried they won't be able to cover all of the transactions, all of the money that's gonna be flowing into Bitcoin when Bitcoin hits that new all-time high of maybe 100,000, maybe even $200,000. They're panicking, therefore they're going direct listing to raise the funds. What do you think of that theory?
I'm going to push back on you on that. I know I've covered Coinbase for years, and I understand why the customers are outraged. Every time things get hot, they melt down. You can't trade. People are legitimately pissed off. However, are they doing it on purpose? No. You know why? Because it makes their customers hate them, and it gives rise to accusations like you made. It's just not in their interest to. I think the boring explanation is the better one. Basically, when there's a surge in trading, they have to add a ton of server capacity. The one way they could avoid that is keep lots more servers online all the time for those spikes. They're just too cheap to do that. And so they're basically saying, okay, we will screw our customers here and there, let them have a bad experience because it's not worth it paying all this money to keep our servers online. As for the parallel with Robinhood, that's interesting. I mean, what if there's a big, exodus? Are they going to be able to pay everyone out? I think they're in a better financial position than Robinhood. Robinhood's losing money. They're really, kind of run by the seat of their pants. And what happened when they, sort of shut down the trading of GameStop and things like that was the, DTC clearinghouse was like, hey, Robinhood, margin call, show you can cover, for all of these trades out there. That's why they slowed things down. I think Coinbase has got enough of a Bitcoin hoard itself, and they just have enough money that they're not in the same vulnerable position. However, their tech stack, like Robinhood, is susceptible to outages, which is going to, piss off small investors and ultimately hurt them. But as I said, it's rough out there being a small investor. That's what happens to you when you're small.
You said that they're cheap and they just don't buy the server capacities to handle with the surges that you see when there's a uptick in the market, $40,000, $50,000 Bitcoin or whatever we're going to see in the future. Hopefully we see something like that in the future. Then can you please do me a favor, since you've been covering Coinbase all these years? Why is their customer service so crap? Again, are they just cheap?
Yeah, I mean, this is just a Silicon Valley playbook. It's not just them. I mean, it's all about avoiding, costs. It's about scaling and automation. Robinhood and Coinbase. I'm actually working on a story about this. Why is your customer service so bad? It's because in Silicon Valley, you make a choice. It's like, let's have the chatbots handle it. This all looks expensive. Let's not do it. And telling each other, oh no, you can do it by like going to our app, finding an answer. And I think over time, they're going to have to get with the program and add more live customer service agents. But in the meantime, when Silicon Valley companies have their foot on the gas in growth spurts, like trying to go towards becoming public, they cut corners, and they cut corners enormously on customer service because it's expensive, because you have to pay someone to sit in a chair and answer your phone call, and you have to pay them a salary and maybe some benefits. And, why not just not do that and put in a chat bot and say it's all fine, even if it's not? So, I think a lot of people are rightfully frustrated with Coinbase, but they're not the only one that does this. Just any Silicon Valley company growing quickly does the same playbook.
Going back to their direct listing for one moment, and one thing I couldn't find anywhere in any of the readings I've ever done in the past couple of weeks talking about Coinbase is how much stocks they own. I mean, they're doing a direct listing; they're not diluting their shares. So therefore, if they want to raise more money, put more money into their coffers to build up whatever they want to build up and create more products, they're going to have to dump some of their holdings. How much stock do they hold? Who's holding that stock? Is it Coinbase? Is it Brian? How's that going to work?
I don't have it at the tip of my fingers. I should, but it's a fair amount of stock. And how direct listings work are, if you're a company that's doing pretty well, you've got all these employees who are eager to cash out. They want a public market to sell their shares on. Especially you're 8 or 9 years old, like Coinbase is. So what you can do, rather than IPO, which means paying Wall Street a bunch of money, just float it directly. Let people sell what they want. That lets your employees unload their stuff. Lets your executives do the same. Strangely, the SEC just changed the rule. Until this year, you could could not raise new capital with a direct listing. Now you can. Interestingly, Coinbase chose not to, which is a good thing in that they're for them because they're not diluting anymore. It also shows how confident they are and how much money they have. They're sitting on a lot of cash. Their first quarter, I bet they're going to kill it given the recent bull run. But in terms of, who's going to make money? Well, Brian Armstrong, Fred Ursum, the two co-founders, Andreessen Horowitz, their chief of product, their head lawyer, they've all been paid. Part of the reason Coinbase recruit these people is like, here, have like 1 million shares. And now they're going to go sell them and get really, really rich. Their lawyer or their board member, Katie Hahn, she's going to make like $200 million. So, all these people are going to get fantastically rich. And then you look at, like Mark Andreessen as an individual, again, first backer of Facebook and his firm, they're holding like millions of shares. They're going to get absurdly rich. They're going to make billions off this. But I mean, that's just how it goes. That's the startup game. Everyone starts to start up with a dream of getting to this point, but most of them fail in the first year. A bunch more fail harder later, and there's just a handful that kind of cross this golden finish line. So I'm not happy or sad for them. I'm just saying that's how it is.
This is going to be an episode I hope people look back to, because I'm going to ask this question and you might be quoted in 10 years. Where do you see Coinbase in 10 years?
It's theirs to lose, and that's a good question, because if you get these answers wrong, the quote's going to be pulled up and be put in the face for years. But I mean, I'll take the bait. I'll answer it. I think Coinbase is in a position to basically become the first major crypto bank in the Western world. It's theirs to lose. I mean, there's competitors. They have to, figure out their leadership structure. If they make mistakes, they make unforced errors, as they have in the past. They've got, sort of erratic management style. They could blow it, but right now, who else is going to do it? I think Coinbase is going to keep, taking more and more of the incoming newbies of crypto. They're going to partner with banks. They're going to acquire any potential competitor, and they're going to be freaking giant. So, I'll throw it back to you or to your listeners. Who do you think is going to dislodge Coinbase? If not them, then who? Right now they've got the field almost themselves. Kraken's good for a certain type of customer. Gemini's tried, they never got traction. Binance is out there, but like if the Binance steps foot in North America, if their CEO comes here, there's a good chance he'll be arrested by the SEC. So I just don't see a real competitor for Coinbase right now. It's not saying I'm rooting for them or not, but that's just reality. They've built a kind of competitive moat, and it's theirs to lose.
Love it. Jeff Roberts, executive editor of Decrypt and author of King of Crypto. Thank you very much for coming on the show.
That was a ton of fun. Thanks, Matthew.